Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey everybody.
Hey Lauren, this was brought to our attention by one of our valued clients, Douglas Marshall, and thank you Douglas for bringing this to our attention. There was a PBS special on Frontline with one of the heroes of the investment world, John Bogle,
right.
One of the founders of Vanguard, and had a very lengthy discourse.
It's a long interview.
Yeah, different topics. So I think what we'll do is likely break this out to maybe 2 episodes, but I thought it was fascinating right at the beginning. He talked about the inception of the first mutual fund, right, and how it's kind of evolved to today.
Yeah.
So what did he say about the first mutual fund?
Well, Jack Bogle is certainly my hero in the world of investing, and I go to the Bogleheads reunion and all that, but I forget for just how long he's been involved in the industry. He talks about being at the Wellington Fund in I think 51.
Yeah, the very first fund.
Right. Yeah, 1951, and I thought, wow, 1951. But that's when he started. And he said, when he started at the Wellington Fund, they only had one fund. That was it. So that one fund had better do well. Right. They were paying attention.
They paid attention to all parts of it.
Right. Yeah. And what he pointed out is that historically, if you go back to the very not just the first Vanguard fund, but the very first fund of all time.
Yeah, the MFS.
Massachusetts
fund.
Right. Yeah. That fund.
1924.
Right. When it came out, what I thought was interesting is the way that Bogle described that fund. He said it was, for its time, fairly low cost. It was what we would call today kind of a passively invested fund, or at the very least it was a fund that did very little trading. The purpose of buying this fund was not to get spectacular returns and not to try to beat the market. They had no intention of that. It was just for investors who didn't have enough money to buy all the different stocks that they wanted. Now they could buy a fund that owned a diversified basket of stocks.
Right.
And of course, at that time, they didn't think, as Curtis and I do now, that you should own international stocks and all these other sorts of things. But to the extent that people thought you should own the stock market, that's what the fund did. It just owned the stock market. And mutual funds were managed that way for a long time, mostly up until really about the 1950s. And then Bogle says fund companies changed, and they moved from trying to basically just invest people in the market to trying to market their funds.
Right. They started adding more funds.
Right, more and more funds. And one thing, we disagree with Bogle about a lot of different things, but one thing I've always liked about him is he's not afraid to criticize Vanguard. Right. And he comes out and he says, even Vanguard, it's his favorite company, even Vanguard now has 200 or 300 different funds. And after a while this is just confusing to investors. Right. And so I thought it was interesting because it validates a lot of the things that we do for our own clients, how we technically have 3 different funds, but they might as well just be one fund that's adjusted for your risk tolerance. We essentially have one strategy, and that's it. That's what we use. Yeah,
so to summarize and finish up this episode, Jack Bogle really believes, and this will come into play for the 401k discussion in our next episode, that simplification of the investment experience is key. But what's happened is companies started out as a really good idea with having maybe a simplified investment structure for the common investor. Right. But now they've become marketing machines, and they just keep bringing up all these new funds. Right. So they can have choices to move to this fund, to this fund, to this fund, depending on what the flavor of that month is.
Yeah, and unlike in other markets, in finance, all those choices aren't benefiting you.
Okay. Well, thank you. Well, we'll see you next time on Erickson TV. Bye now.
See you next time.